Welcome to Accounting 100 Practicum Week 6, Cash Disbursements and Accounts Payable. In Chapter 5, we talked about sales and invoices to record the revenues of the business. In Week 6, we will be studying the expenses of the business. There are typical business expenses like rent, salaries, insurance, office supplies, and other standard expenses. But for merchandising companies, purchases are also an important and significant expense for the company. Merchandising companies must buy products to sell. You can refer back to the expense section of Chapter 5 in your textbook for a review of purchases. The term we use in business for writing checks and paying bills is cash disbursements. We have already studied using a petty cash system for purchasing small, insignificant items when we looked at our Practicum Week 2 module. So, when checks are written directly to vendors, there is no need to post any amounts in the accounts payable account. You are simply debiting expenses and crediting the checking account. The remainder of this module will focus on the accounts payable method of recording expenses. The merchandising company uses the purchasing account to record the merchandise bought for resale. Purchase orders are often referred to as a PO. It is the company's written offer to buy certain goods from the vendor. The vendor then sends an invoice to the buyer to show that they accepted the purchase request and will be shipping the merchandise. Purchase orders are commonly used by all types of businesses for all kinds of expenses. Here are the common types of purchase and cash disbursements documents. The purchase requisition is typically the first step in the process for a purchase transaction. Take a moment to review all of the items that are required for this sample purchase requisition. The purchase requisition summarizes all the necessary information needed for the purchase and for the approval. Take a moment to pause the PowerPoint and read each of these important requirements. The price quote is listed here, and you saw an example on the previous slide that required that price quotes must be obtained from 3 vendors for any purchase expected to be over $2,500. Usually, the lowest quote is approved and the vendor is accepted. Just because an employee requests a purchase for an item does not mean that it will be approved by management. Sometimes it's not approved because the form has not been properly completed and it is sent back to the requisitioner. Once the purchase order is approved and prepared, copies are forwarded to each of these departments. Here's an example of a purchase order used by our company, Clothes for a Cause. Pause the PowerPoint now and review each of the items included on the purchase order. As you can see on the example purchase order, all of the following items are required. If a company is using an electronic accounting program and has already prepared a purchase requisition, then the details for the purchase order will automatically populate to the purchase order once it is approved and authorized. It's important to ensure that the items that were ordered were received. You can see that the receiving report is the document to compare the items that were received from the vendor to the original purchase order document. Another important procedure is to mark the purchase order and the company's supporting documents, including the invoice, as paid. The accounting department maintains all of the accounts payable documents in the accounts payable file. How are these transactions recorded in the financial record? Well, at the time that the purchase orders are prepared, the accountant makes the following journal entry. The expense account is debited and the accounts payable account is credited. This happens automatically if electronic accounting software is used to prepare the purchase order. Once the items are received, the accountant makes the journal entry to record the payment. So accounts payable is reduced by the payment amount, and that is using a debit, and the checking account or bank account is credited at the time of the payment. Writing checks is not the only way a business pays their expenses. Credit cards are also utilized by organizations. However, it is very important to have the proper policies in place to ensure strong and effective internal controls so that the credit card is not misused by employees and that proper documentation is maintained. After making a purchase on the company credit card, the employee must submit the detailed receipt to the business office. Then the accountant posts the charge to the credit card payable by debiting the expense account and crediting credit cards payable. Every month, the company receives a statement from the credit card company. When it is received, the accountant matches the individual receipts from the expenses and purchases to the statement and then pays the credit card bill by making the following journal entry. The procedure on the previous slide is the recommended way for the business to record the credit card purchases. Sometimes a company has limited cash flow and can only pay a portion of the balance due. Using these procedures allows the company to maintain the actual balance in the payable section of the company balance sheet. Similar to credit card expenses, travel expenses require good policies and procedures for effective internal controls. Government travel often has special restrictions. For example, there is a maximum amount that can be spent for meals and incidentals. The purchase request should be prepared and authorized before the business travel takes place, and then expenditures related to the travel can be paid. The accounts payable ledger is used to maintain all the balances for each of the vendors in one schedule. It is similar to the accounts receivable ledger that we studied for sales on account in Chapter 5. The accounts payable ledger lists all the balances for the vendors at a specific date, for example, at the end of the year. The next slide is provided to give you an example of the accounts payable schedule. The balance sheet would show only the total of the amounts due to the vendors at a specific date. In this example, the accounts payable is $6,400. This schedule presents the accounts payable for close for a cause at December 31st, 2018. Now you can return to the module to complete the Practicum Week 6 quiz. You will be making a journal entry to record the purchase on the close for a cause purchase order in this PowerPoint.